Good morning, and happy Wednesday. I'm on a roll here. I got Monday, Tuesday, and Wednesday correct. Let's keep it up. I got to share this text I got yesterday. Maybe you guys get some of these. Rick, this is John here. I'm your FedEx driver. Your delivery schedule for today, please let me know if you will be at your house or if we have to reschedule. Use your phone and click here, sppgx.com, and some other digits to set your delivery preferences for your package. Yes, FedEx guys pull over and text the next day delivery instructions to everybody every day. Who clicks these things? So welcome. We're going to take a look at where we're at, some of the predictions that we saw coming into the market, and kind of take a look at the numbers and say what has to change to get us out of this mess, get us out of these bidding wars. We're sitting today at 4,200 homes on the market. You know, we're still stuck in that rut. The 7-day moving average is still showing us put 4,000 on the market, 4,000 get gobbled up. None of this is going to change until, as we spoke yesterday, inventory goes up. All of the reasons for inventory to go up are being analyzed and dissected, and lots of theories. The bottom line is nothing changes until that number goes up. And if we take a look at some of the forecasts that we had out there, we'll start with Realtor.com. Housing 2021 forecast. Sellers will get top dollar as buyers struggle with affordability. They couldn't be more right in that prediction. Now, predicting home prices nationally is always a challenge. Case Shiller has, they track 20 cities. Realtor.com tracks pretty much all of them, and they were saying it's, we're going to hit a peak of 5.7. Who knows? I mean, we're tracking way above that. National prices really don't mean diddly squat for us. Seasonality makes a return. Not here. We do have a strong May and June every year, but this year could be wildly different. Nothing's the same right now. Home sales are going to go up 7%. Mortgage rates on the move may hit 3.4. I think they did, but they're coming back down. And wild cards could shake things up. So that's not a bad forecast when you really think about it, going into 2021. We're looking at mortgage volume, and this is where you have to be careful what you read and then stopping in one sentence, because it says that the seasonally adjusted purchase index dropped by 5% from 1 week earlier and 4% unadjusted. So that's giving the impression that mortgage applications are down 4%. But then it ends, and keep in mind, it was 34% higher than the same week last year. So when you start hearing numbers that mortgage applications dropped, it doesn't really mean that much. We've been going up 3-4%, down 5% for quite some time now. I look at our 7-day moving average, and the only time I saw listings get up above 4,500 up to 4,643 was way back in September, back here. And we're looking now, and both the numbers are coming down a little bit the past few days, but they're still at par with each other. They're just pacing down at the same level. This chart, small number moves look like a big move, but they're not. We're just stuck, absolutely stuck. When we look at inventory on a monthly basis, and let's see what this one is here. No, that's trustee sales. I'm going to touch on that in a minute. This is active listings. So you can see the bottom line right here. This is where we're at. 4,957 is what they're showing. It's on a weekly basis. So you can see we have a long climb to go just to get up to 2018 level. They were rattling around 19,000, 20,000 here. I would say that market was considered fairly normal at that point. You got into 2006. This is where when the trouble started. We were rocking around 24,000, 25,000, but then look what started happening as you got into the summer and the fall. Inventory went to the moon. And the difference, they went from 25,000 to 45,000 from January to September. That's a pretty rapid climb, but nobody was paying attention to it. Everybody was out there feverishly buying homes because they didn't think they'd get anywhere, and they weren't even seeing that builders were overbuilding. that there were homes everywhere where nobody was living in them. Nobody was paying attention to that. They were in a hurry to buy homes with all these cheap mortgages. So everybody turned a blind eye to those numbers. Then along comes the financial crisis in 2008. Inventory skyrockets to 55,000, hits a peak of 56. Price per square foot went down to like $68 per square foot. The end was here. So again, nothing changes until this line starts to climb up. Now, what can make that line climb up? Financial crisis, certainly that would make it spike. That's what happened here in 2008. Do we see a financial crisis? We could speculate all day. We don't know. I'm looking at foreclosures, and this is where we're at here. Let's see if I could move my ugly mug there. I think, no, that's not going to do it. Yeah, here we go. Let's see if I can get that there. And there we go. Down here on the bottom right, this is where we are. They're just little tiny specks of dust as far as active foreclosures. But look how many years that we kind of muddled from 2014 through, having about 500 to 700 homes that were in foreclosure at any given week. And this is what happened during the spike period. Let me put this on hold there for a minute. This is what happened when things got really ugly, 2008, 2009, but that was a major, major crisis. So there's always a little number of foreclosures down here. And I know I bought a foreclosed home out in Fountain Hills. They're not always the bargain that you think they're going to be. One of the things about foreclosed homes is that the bank doesn't always give you a real bargain, because it costs them on average $65,000 to move a foreclosure. And but they sell them to you as is. And they don't fix anything. So you get the inspection and you got a list as long as your arm. They say, well, that's nice. We're glad you found that. And sorry, it's broken. We're not fixing it. So I don't see those coming down the pike here anytime soon. We'll see what happens. I think that we're just going to be stuck here for a while, folks. Looking at those inventory numbers and waiting for things to shake out and for inventory to come up, even if we start increasing inventory by 10% a week, we are going to be in this situation till Christmas. It's always easy to look at volume of buyers and the amount of homes available right now and make short-term predictions of 6 months to possibly 9 months out. And I think it's safe right now, 6 months, to say we're stuck here. We're going to be in a situation where, maybe as inventory starts to climb up, the bidding wars will start to slow down a little bit. But I have to have some kind of hope or some kind of number that I'm looking at that shows that inventory is going up before I can even say that with any confidence. And right now I can't say that. That inventory number is stuck. We're seeing that buyers have buyer fatigue and they're backing off, but they're not backing off enough to let inventory climb. And buyer fatigue is real. When you've been turned down a few times, you reach a point where you're just like, I can't play this game anymore. But along comes a house that maybe came back on the market. And sometimes there's seller fatigue too. Sometimes sellers just go, just take the next deal. Let's just move on. We're ready to pack and move. So you just have to be consistent. You have to keep trying. You have to figure out what your financial goals are and just go for it. The other challenge that we have is we're looking at asking price, and buyers say rightfully so, well, I don't want to overbid that asking price. I don't want to overpay. But we don't really know what the market price is anymore. We don't even know if the asking price is the real market price, because if you're asking $425 for a home and it got bid up to $475, that's the market price. And appraisals seem to be matching those, because appraisers get to see how many offers came in for that home and what the price was, and they're moving the appraisals right up. Not every time, but it's hard to look at an asking price and say, oh, that's what the home is worth. Do you understand what I'm saying? $425. Well, that's what it's worth. No, that's the asking price. So just because you offered $450 doesn't mean that you overpaid. If the market price, if everybody else who wants to buy that also wants to pay $450 for it, but you happen to put in an offer for $455 and you got it, that doesn't mean that you overbid on a house for $425, because there's still a line of people that want to buy that place for $450. So that's the real price. We just don't know. We're not comfortable with throwing a lot more money at it. I'm not comfortable with waiving inspections, but sometimes on newer constructed homes, I'm going to say 2007 on up, maybe your risk isn't that bad. You got to go around and look at the air conditioning units. So if you're going to waive, make sure you're not waiving them any older than that, because, you might have a problem with the roof, but you might be able to do some limited inspections. So let's say that your, inspection costs you about $500-600. But let's say in order to get your offer accepted, you offer to do a short, limited scope inspection. In other words, you just say, I want to have the AC unit checked out on the roof. That's it. Plumbing's pretty visual. Everything else is there. I'll call it a skinny inspection. You hire a guy to get up on the roof and inspect the roof, and you bring an AC guy out to look at the AC. If those two major expenses are okay, then maybe you move on. Just a thought, just another tool that you could put in your toolbox. Appraisal waivers are common. Everybody's doing them. They are saying that I'm going to offer you $450 on a $400,000 house, and if it doesn't it doesn't come in at $450, I'll make up the difference. And you got to cap that. Say, I'll make up the difference down to your asking price. So you don't want it the appraisal come in at $380 and you're sitting there at $450. So, every offer I see coming in has got some kind of appraisal gap language to it now. So you got to be careful with it. And you got to understand how much money you got to work with. Talk to your lender and go ahead and run those numbers by them. Hey, I'm thinking of writing an offer for this. I want some appraisal language. How do you recommend that we craft this? And what's my risk? So make sure you understand that before you get in. Because until we see this inventory number grow, we're not going to see any relief from these kinds of tactics to go out and find a home. And you know what? It's just as tough in the over $1 million market right now. Those guys really have a lot going on. That market's strong. As long as the stock market is strong, that's going to continue. Also, a lot of chatter about inflation. And, inflation really doesn't affect real estate, folks. It's just inventory. So inflation can be a result of low inventory. But inflation in groceries and inflation in lumber and inflation in fuel doesn't always equate to a rise in home prices, because you still need buyers that are buying that inventory. So you can have all that inflation here that raises the building cost, but if there's no buyers gobbling up that inventory will climb. It will ease pricing pressure on housing. So there isn't a real direct connection. So inversely, the opposite can happen. The fewer homes we have for sale, the higher the prices are going up, and then that equals inflation. So it's not that inflation caused the high prices. Went off on a little tangent there, but I just thought I'd throw that out there. In the meantime, I want everybody to have a fabulous Wednesday, and I will talk to you tomorrow.